class, and please remember that all your classes are uploaded to YouTube. I have some issues with Brightspace. I tend to solve them on this week, but whatever. You have all the video recordings on YouTube. You can access them since today, and I have uploaded all the classes already. So you have all your content uploaded and saved. Business combination and consolidation, guys. Why would you think, and first question to start, what would you think regarding business consolidation? Why would you do a business combination? Why would you combine your business? And this is only matters of international negotiations, guys. This is totally your topic.
To facilitate maybe certain aspects of your company that aren't as strong. So instead of using time and effort to improve them, you join another company or whatever that is strong in that area that you're lacking.
Nice. Yes.
So by combinations, do you mean like mergers or collaborations or what?
Exactly. Nice, Adriana. The other name, or commonly known, the other name of business combinations, it's commonly known as mergers and acquisitions. It's M&A. This is the class of M&A. One of my favorite topics, should be one of yours also, because I will explain the value of them. And it's basically the objectives and the goals are totally related to business, international business. So why would you do a merge and acquisition? I just spent like one class on the previous semester regarding that, but this one it's gonna be like 1 or 2 classes, but fully in depth, like only business combinations, guys. Why would you, to start, the first question is, why would you do a merge or acquisition? Totally acceptable what Sebastian implied. One of the main reasons is to gain access to critical resources as know-how, technological know-how, and raw materials. What else is? Come on, David. Let Arturo drink some water. Can you repeat, Samantha, please?
To eliminate competition.
Why competition?
Maybe because you can merge with another company that, yeah, like, I don't know how to say it. Like you can merge with a company that in another market or in another country might be your competition.
One of the main reasons is to enter a new market. Exactly. Come on, guys. Come on. You mean, come on. How do you say lluvia de ideas in English?
Brainstorming.
Brainstorm. Let's brainstorm.
Teacher,
you are the CEOs. You are the CEOs of your company. And why would you do a merge and acquisition strategy? That's the first question, and I can tell you, like, from personal perspective, like, you have one company, like right now you have a business with an SADCB, an INC. What would you think of doing a merge and acquisition? When should you start it, and why? The question is, why would you start a merge and acquisition?
Maybe also to obtain not easier, but competitive advantage.
But that would suppose that to gain a competitive advantage means that the company that you are acquiring has a competitive advantage, right?
Maybe not a competitive advantage over you, but merging with them helps you gain advantage over someone else.
Nice, nice, exactly. That makes sense. Come on, guys. You're very quiet. It's only 6 p.m.
Teacher, I've heard something about, well, not heard, but I've been in classes in which teachers say something about taxes, but I don't really get why about taxes.
Mhm. Yes, taxes is one of the reasons. It is related to a tax planning strategy. And remember obviously the entering to a new country that has lower rates of taxes always imply transfer prices. Okay, just take care of that. But yes, it is one of the reasons. We can take a look at one case regarding that. But at the end, it's like if you move to another, like let's do a quick example. Like what if your a company is based on purely technology and your main distribution channel is online? So you have www.andrealacruz.com. If you collect something from your website, where should that be money allocated in order to pay taxes? Who knows the answer?
Wait, could you repeat that?
Imagine that Andrea has a whatever service, www.andrea.com, and you as customer purchase the service of Andrea, and she collects $100. Those $100, where should be those allocated in order to pay taxes?
A separate bank account.
Okay, what I can open accounts.
But meaning like I have that website like internationally? Or what do you mean? Like
yes, exactly.
where in like the nationality, I don't know how to say it, the nationality of the bank account or the country or currency you're receiving?
You develop those those are the kind of questions that we should be asking. Like you develop a web page.com. So where that the money that you collect from that .com web page should be allocated in terms of paying taxes?
Where I'm living?
Where you are living. Anybody else's? Thumbs up, thumbs down.
Where I registered like the brand or that.
Where you register the brand. Two theories. Anybody else's?
Maybe where you operate.
Where you operate, that's important. But Andrea, what if you have a catamaran and you love to do some travel in your catamaran and you operate from your catamaran because you have a satellite internet and you operate your andreas.com webpage?
So kind of like a digital nomad?
Kind of.
Okay. So yeah, that would not be, the first option would not be possible.
You open an offshore bank account with the company of the
an offshore bank account
there.
An offshore bank account.
You avoid taxes.
Nice. I like your thinking, Sebastian. Nice, nice. Guys, it would depend on the regulation of the country of origin. One of the, there are a lot of considerations. I don't even have the answer for this question, first of all, because you have to first take care of your country of origin. I don't know the rules of the country of origin. Like, for example, where is the base of Facebook? Where is Facebook based?
In the US?
And where do they pay taxes?
Somewhere else.
Amazon?
But Amazon doesn't pay taxes.
Well, then
Oh,
nobody
wait, no,
pays.
Jeff Bezos.
Jeff Bezos doesn't pay taxes.
Something
Like,
like
yes, but I'm trying.
Deal.
I'm trying to reach that aspect, but with your self conclusions, like, yes, why they don't pay taxes? You can do it also. But why? The
example,
reason is why. How would you do, or what is the plan intended to, or what are the steps that you have to do in order to don't pay taxes?
Oh, well, first we would have to check, as you said, like, for example, regulations. Like, maybe in the US, if you tax through there, maybe you can, I mean, you can have the same product, but it will be more heavily, I don't know how you say it, taxed in the US than, for example, in, I don't know, in China or something like that. So you tax it through there with a separate account or something like that. I'm trying to make sense of what I'm saying. Just give me a second.
No. I get you, and I think also it's the same. Like I told you, I don't have the 100% correct answer. It's very difficult because you need to know to know all the regulations from the countries. But what I can tell you, it's the .com dominion. It's like commonly known as a universal dominion. It doesn't belong to any country. Did you knew that? The .com dominion. That's why you have .com, .mx. Ah, okay. This is a Mexican dominion. .com, .es. Ah, this is a dominion from Spain. But if you have only the .com, like go to your Facebook.com, it doesn't have a country that to relate the .com. So you don't know.
I thought it was because they donate money. Because sometimes
No,
when
that's
people
the .org.
money, they don't. Oh.
The .org means that it's a non-profit related organization.
For example, from what I know of, for example, in places like Panama, where foreign companies aren't taxed, or in Dubai, where they don't tax you over something, or like Cayman Islands, as Arturo said, where you don't get taxed or tax are very deductible. So, for example, Apple has an offshore account in Cayman Islands, and that's how they manage their taxes. So most of the money they make actually goes to them. So there's an Apple in Cayman Islands that's owned by Apple, but it's set like as a separate entity, but it's the same thing. So they tax their money through there because it's more convenient. Because if they tax the same amount in the US, they'd lose half.
This is not part of the class, guys, but general knowledge. Yes, you have your .com dominion. You have something in here and you have your bank account. Bank. How do you collect from this.com the money? How do you collect it? That's the first question. How do you collect money from your web pages? And I think it's super important, guys, because it's not part of the consolidation. I will teach you how to save some taxes regarding this, because that was Andrea's question. But I told you, for me, for what I do, I think this is the whole breadth piece, because all main of the large proportion of the economic activity is in the web services, right? You tell me, cryptocurrencies, investments, everything, it's on the web. Tourism, like ViajaClick. So how do you collect money in the web? Your bank makes the transaction. You connect directly the account to your bank. They don't have the technology.
But
Would
people are always buying things with online with credit or debit card, right?
Perfect. Until there, everyone is aligned, right? What are the different banks in Mexico? Don't tell me the ones that are international. The ones in Mexico.
Bancomer.
Okay, BBVA. What
Banco
else?
Azteca.
Okay, Banco Azteca. A very small one, but yeah. Let's go with the biggest one, the biggest ones, guys. Amex, American Express.
But you said Mexican, right?
American Express has a Mexican company. I get you, Adriana, but they also have a Mexican subsidiary. It's part of today's topic. What else is main banks, guys? Main banks.
There's another one that's blue.
Which one?
Banamex.
Banamex, perfect.
Yes, that one.
Banamex. Other main bank. We're missing just one or two main ones.
I don't know if that's it.
Yes,
There's
Banorte, it's a
Santander
main one, and
Santander.
Santander, it's a main one, and HSBC, it's a main one. Those are the largest, the largest ones. But okay, do you collect in your .com with only Bancomer, or you use all of them?
Well, sometimes it says like Visa or MasterCard.
And you have to accept, and even Amex, American Express, which is different from Visa and MasterCard. So do you think that Bancomer will collect money for American Express? So you need, guys, and this is what my objective of teaching you this is, you need an intermediary between your banks, which are these ones, and your web page, which is called a payment processor. Payment processor. Why? Because Bancomer won't collect and doesn't have the technology in order to collect for Amex or for Banamex. Even for business purposes, imagine that Bancomer has the American Express permission to collect on their behalf. Doesn't make any sense. So what if the payment process, I can contract it with a payment processor from Panama? And we know that the .com it's commonly used for universal purposes. It doesn't belong to any country. Are you getting my point?
I have a question. Like, if you register your company with .com automatically, you don't pay any taxes, or how does that work?
No. That's why it's a very hard question to assess. So you even have to contract professional consultants to do this type of of assessment, guys. But this is the reason why Facebook, that it's a .com, and that what is the main source of income for Facebook?
Ads?
Ads, advertisement. That's it. But that money from advertisement, where does it goes? To the US? You didn't know that Facebook has an Ireland company, an Irish company, and why it's on Ireland? Exactly for this same reason. We have established that their .com allows them to assess where I need to establish my intangible asset, that I can put it in Ireland, and make the payment processor or the payment process be done in Panama, and deposit my money free of tax in Panama, or whatever Virgin Island, or the 60 countries that have tax paradises. For instance, how as an authority would you recognize that somebody is depositing in Panama if you are from the US? You would have to ask you would have to ask the government of Panama to make your accounts transparent to me, the US, because I know that you're earning money and you're not paying me taxes. So this is not the tax paradise class, guys. Those are the questions that we should ask. Yes, exactly. Andrea, one of the main reasons to make a merchant acquisition could be possibly tax. No, it's not tax avoidance, because everything it's legal, but we can say that you can lower your tax basis and pay less taxes. You didn't hear this from me. No. This is legally goes. So I wouldn't tell you anything illegal. So what else is, guys, to move on? The first question is, and for me, this is the most important question of the day. Like, why would you do a merchant acquisition? Then we can move on to the how do you do the process and everything regarding that. But imagine right now, how do you measure the worth of your companies? Who can help me with that? You know it. You already passed the previous courses of accountancy. How would you measure the value of your company?
The share price.
The share price, yes. But how do you measure the share price? Fundamental analysis, guys. Remember, net present value? How do you get the net present value of your account, of your company? Net present value.
It's the net cash flow over the discount rate plus 1, and as an exponent the time of the cash flow.
Nice. I hope those are the notes from my class, not from anybody else's class. But yes, that's true. So guys, imagine that you have your you have your company, like you did an entrepreneurial thing and you have your company right now. And imagine that you can double the price of your share, meaning that you can double the value of your company just by acquiring a company. And you don't even have to pay for that. How does it sound? You just have to agree with the other guy, partner, with the other company, and hey man, let's do a merge and let's double the value of our companies. Does that sound like a good business for you? I can tell you, like, this should be one of the main reasons that you used to the international business. And it doesn't have to be international. You can do it in Cancun. The important aspect is that you know how to do the procedure, how to conduct a proper merchant acquisition. Because here in Mexico, it's a little bit more difficult because the companies are more informal. They don't have a legal archive completely done. They don't have, sometimes they don't even have financial statements. But let's continue with what I have developed for you guys. I hope that you are wake up, because we have to do an Excel exercise. Today we will know how to do a consolidation process. Not with all the adjustments, but the main process, we will do it. Did you check your emails, guys?
Yes, you sent us an Excel, right?
Yes, exactly. Does everybody has the Excel? Awesome.
Yes.
So let's see. Anahuac, international accounting, consolidation. That's it. How remember the question? Business combination, often referred as merchant acquisitions. Thank you, Adriana, for that. So why to enter new markets, build economies of scale? Nobody mentioned that. Yes. What is economies of scale? Just to check the. Anybody? What is build economies of scale? Economies of scale. What is it? To check definitions.
When a company is so big that can
when you increase
is the word
how do they call this? Increase production and lower cost.
That's economies of scale.
Gracias, Sebas.
Nice, Sebas. Muy bien. So, guys, worldwide value of merchant acquisitions deals reach a record figures of 4.3 trillions. We're speaking of trillions, which more than a half it's from outside of the US, and doesn't mean that it's from US based companies. It means that worldwide we can do them, and it depends on the parent and the subsidiary. We will see those kind of definitions. So business can combine their operations in a number of different ways. First of all, learn these three things. Business combinations can combine their operations in three different ways. First of all, the company being acquired in a business combination is legally dissolved as a separate legal entity. Either the acquired company goes out of existence and is merged into an acquiring company. So the parent drags the subsidiary and becomes just one company. Okay? How would you do that process? You have all of this recurs in a lot of planning, guys. But just imagine, like I told you, the main purpose is like just by agreeing and making the contract of making the acquisition, I can announce it and double down the price of my share. And that means public or non-public companies. So you have to plan out these three, like which combination you want to do. If you want to acquire that company, you would have to move all the contracts to the parent company, right? If you want to acquire it and make it just one company, that means all the processes, all the contracts, all the resources have to be allocated in one company. Huge amount of work. So another way to combine companies is to both parties do the combination and are legally dissolved and make a new company. That means moving both of them to a new entity. Okay. And the third one, which is I think the most common one, is one company gains control over another company by acquiring a sufficient number of its voting shares, but the acquired company continues its separate legal existence, which is the most common one. It's I buy the significant amount of shares in order to control. And control, guys, as we will see, doesn't mean to have 50 plus. What is 50 plus in a legal entity?
Because one has to have the majority in votes, so it's usually 51-49.
Awesome, that's 50 plus, okay? But having control in a company doesn't mean to have 50 plus, and we will see the reason why right now, okay? In either cases, the acquirer becomes the parent company and the acquiree becomes a subsidiary company. Now we know the terminology. The parent company is the one that buys, and the law company that is acquiree, it's the subsidiary. Parent, subsidiary, okay? When we see annual reports, what is the header of those annual reports? If we see Microsoft, how do you see the header of Microsoft? And I'm telling Microsoft because I have an example for you. But anybody? Wake up. What's the header in a financial statement? How do you see the financial statements of public entities?
Consolidated.
Consolidated financial statement. Yes, of course. Exactly. And that means that Microsoft or Ergo, whatever company that you're watching the annual report, it's the parent company which is consolidating the subsidiary companies. So just let me, okay, perfect. So both continue to operate as separate legal entities. However, because the parent controls the subsidiary, accountants worldwide generally require that the subsidiary financial statements be consolidated with those of the parent. So that's why we see that Microsoft, it's a group, or like I have been telling you, like, or teaching you, is ViajaClick is a group, because group means that you have or you will have subsidiaries along the whole way, because you're meaning to have a M&A procedure. So what is the issue with this 50% and control plus? So guys, this is a very important aspect. 50 plus doesn't mean control. And this is very important. I can teach you why. The case of Enron that I have always teach you and mention along the whole courses. Enron is a great example of this, because those guys figure out that what if, now that you know that this is the proper way to consolidate. Oh, let me erase, sorry. Oof. I hope you that you haven't learned how to avoid tax payments. So guys, you have your group, no? Your group. And this is Enron. This is Enron. Those guys figure out that, okay, if I need to control, because control means that I own 50% plus legally from a legal perspective. What if I own 49%? 49%. And I take decisions in this company, because at the end, whatever, it's 49%. I don't have the legal control, but I contracted the board of directors from that company, okay? And obviously, if they misbehave, I will fire them. I will stop the payments. But what if this company requests loans to the banks, and for 500,000 K, right? And what if I tell the bank, yes, it's my subsidiary, so lend them. Perfect. You belong to Enron. Here you have 500,000 K. And these guys were so clever to do, okay, pay me some corporate services. Corporate services. So imagine that this company started to have negative profits, but they got all the cash from this type of bank loans. And imagine if you have enough subsidiaries to replicate this scheme. So control doesn't involve having legally a 50% plus. It means to have control over the administration process. It means that you are capable of making investment decision, capital expenditure decisions on the companies, okay? That's why it's this control definition is so important in order to define that. And it's very different from the fiscal perspective, guys, huh? The fiscal perspective needs to have 50 plus. That's the fiscal perspective. But from financial perspective, if you want to present consolidated statements, you only need the capabilities in order to demand services or have decision power. Decision power is the key element in your board of directors from the subsidiary. Am I self-clear, guys? Did you understand
So are you saying that the 50 plus does give you control, but not control over every aspect, like
the
legal?
50 plus gives you automatically control over everything. Legally, you have control by having 50 plus because you are the main shareholder. And it's not a 50 plus scheme, guys. Like Mark Zuckerberg owns the majority of Facebook shares, and maybe with a 30% scheme, he can have control over Facebook. But what I'm trying to share with you is that the legal aspect or the legal shares dominion doesn't make you the controller. Like what gives your grants you control is that you have decision power over your subsidiaries. That you can tell the CEO from the subsidiary, like, if you don't invest in that or request a loan for me, like I will fire you. That gives you and grants you control, right? And I could have like only 20% of the shares. So the importance of this is, like I told you with Enron case, is that now you know that if you establish that you have a power or control position and that you understand the control definition, you might now make a consolidation process. You can do a consolidation process and show your reports or financial statements consolidated. What is the benefits of presenting consolidated financial statements? Well, you tell me. Take a look at the public companies that make consolidated financial statements. It's like, instead of owning one company, I could have 3, 4 and increase the value of the whole group of companies. What gives you or what grants you that? What's the value of that? You can request more financing, more loans. You can raise more equity because it's worth more. So once we establish the control definition and that you can consolidate, you will need to figure out how to do the consolidation process. I will teach you how to make the acquisition method, which is basically, since 24, we have the international rules regarding this acquisition method. All the business combinations apply this method. It's super hard. No, super easy, guys. You will see it. It's very, very easy to do it. But the most important aspect in order to do this acquisition method is to understand properly the definitions that I'm telling you. If you have any doubts regarding what I tell you since the beginning of this class, you need to be very clear, because we will begin with the first topic, goodwill. Goodwill, and I don't want to like always with papelito en mano, no, like I always teach you. Let me share with you with papelito en mano that this topic exists. Wait a second. What is it? I don't see it. Oh, okay, it's okay. It's over here. Are you watching my screen?
Yep.
Yes.
So guys, we will learn today another line of the balance sheet. You know what is cash and cash equivalents, short-term investments. I think you know it. Account receivable, inventories. But here in the fixed assets, you have property, plant and equipment, lease right of use assets. That's a more difficult, well, another topic, a little bit difficult also. No, not that difficult, but you have in here equity, investments, and goodwill. What is the translation of goodwill? Who can translate goodwill for me?
Donations.
Donations, exactly. So when you do a merchant acquisition, you do a donation. You don't have to know what it's a donation, a goodwill. Now let's get back. So this is Microsoft example, and I can give you a lot of tons of these examples because almost all the public companies have this type of example. And why? Because they basically increase their value by acquiring companies. Let me share with you. Why would you acquire a company, guys? Instead of opening a new operation in a new country, what if I buy from that company? I'm Microsoft, and I buy from that country the leader of that country without having to move a hair. I just have the cash, I buy them, do a merchant acquisition, and I increase in less than 3 months. I doubled my price of the stock. So the goodwill is a measure as the difference between two aspects. It depends on the methodology, but basically remember, what is fair value, guys? Who can answer me what is fair value? Oh, we surpassed my alarm. We surpassed the hour. Before starting the goodwill, guys, let's take a break, 10 minutes. Now we will get into the numbers right now. But we just have two more slides and we will get to the numbers. So let's go a break, 10 minutes, and see you in 7:20, okay?
That's perfect.
See you in a bit, guys. Okay. Thank you. So we have different types of valuation, guys. The first one and the most common one is what Andrea just told us. It's assets minus liabilities, right? Liabilities. The equity, you don't consider it because at the end, it's part of the shareholders' value, right? So this is something called book value. Remember that definition? Book value? Guys, you have the definition book value. That's something that it's on the records. That's on something that you can see on the accountancy. But is that the same value? If we divide that book value against the total number of shares, do you get shares, number of shares? Do you get to the price of what the share of the investors are paying for those shares? That's a question.
Teacher, can you repeat the question, please?
If you divide the book value by the number of shares, do you get to the final price per share that the investors are willing to pay for those shares?
Yes.
Yes. Thumbs up for the ones that thinks that that's a correct. Sebastian, Emilio. The other ones say that they do not accept that definition. So what is the market paying? What are the investors that are investing in the stock exchange commission? That price, that final price, what it's called? What is it called? I gave you a tip.
Fair value.
No, but close, close. That's what that's those are the definitions that I want you to start learning. Like, okay, we have book value first, perfect, book value. What the investors are willing to pay, because that's what the market is demanding. Book value, you have market value. Okay. Does that make sense to you? Because this is the price that the investors are willing to pay. And which ones are the investors? The ones that can enter to GBM Plus and buy a share of a public company. Those are the investors. But we have something else in here, which is called something that Samantha just said is fair value. How do you get the fair value of things? This is the most common accepted methodology to get the fair value of things. How do you get it? And this is the reason why if you add up to that fair value, the fair value of a company, if you add the fair value of the next company, you get to a better price. How do you get this fair
But
value?
to get the fair value, you just have to multiply the price the share is at by the amount of shares.
No. Anybody else's? I will make you take the course of financial statement analysis again. Eh? Come on, guys. Come on. How you get the value of things? You have to do projections of the cash flow, discount them, get the net present value, discounted by the financing rate, which is commonly called weighted average cost of capital. Remember? Yeah, everybody, good, thumbs up. Remember? Just refreshed you. No? What? Yeah, come on. I explained it the whole last semester.
Yeah, it was part of our Starbucks spread. Well,
Exactly.
Our final budget.
Exactly. You get the projections of the cash flow. And why not cash flow? Why cash flow and not net profits? Because in the net profits, you have some estimations like depreciations and stuff that the investor doesn't want. Just tell me only money in, money out from my pocket. And that is why you as an investor decided to evaluate your companies regarding the cash flow, not the profit and loss. And you discount those cash flow projections because you know that by year one, you will be earning this amount of cash. And by year two, you will be earning this amount of cash, and year three, and year four, and year five. And by the end of year five, you do a perpetuity analysis, a perpetuity calculation where you decide to go to infinite and do evaluation of your, that's the fair value. That's the fair value. So moving on, guys. You have something called fair value of net assets acquired. You do the whole estimation of the net value of the fair value of your company, but you don't pay fair value. Why you don't pay fair value? Can anybody explain to me? Why you don't pay fair value? Why you don't pay fair value in the market? Guys, why you don't pay fair value in the market? Because remember, fair value is how to get fundamental analysis, right? You know that the price should be assessed at this price because that's the fair value. So that's how you determine if the price of the stock is subestimated or overestimated, and you identify investment opportunities because obviously the opportunities are where there is subestimations of the price. The market is paying 80, but in my fundamental analysis, the fair value should be at 100, 150. So there's a gap between the fair value and what the market is willing to pay. So why there is a discrepancy between market value and fair value?
Because it's less biased.
It's what?
The fair value is less biased than, for example, book value.
What do you mean? Explain it.
I mean, when you're looking at book value, for example, for an asset, as you said, you look at things as depreciation and like many factors. Well, fair value is like, it's like more reasonable.
No, but the fair value methodology, it's the commonly accepted methodology. So it should be the same methodology for all the companies. That's why I explained it to you. That's why I taught you last semester how to get the fair value. So you know the variables that affect the fair value of your companies. Because at the end, you as administrators, what you want to do is to make things worth more each time, no? Each year, each period of time, to get a fair return of the investment that people is willing to pay for you. So the important aspect in here is like, okay, there is book value, fair value, but there's market value. And why is there a discrepancy between the fair value and the market value? Why shouldn't we, everybody, evaluate, as I'm telling you, because it's the most common accepted methodology?
I don't know, but maybe it's because the fair value is just the value of, like, yeah, the fair value of the asset or the product or whatever, but the market value, like the price could be affected by other things, like, for example, I don't know, when the demand of the product can make the price go up, or like things like that that can affect the price.
What else is? What else is? Yes, there are a lot of variables that are not in this commonly accepted methodology, like psychology, like people willing to pay an overprice because it's Elon Musk who is riding the company. because it's traveling to space, and I don't care if they have positive EBIT. I'm just willing to pay SpaceX shares because they are traveling to Mars, and that's it. I don't care if they pay me dividends. It's the market. There are a lot of variables. That's why we have behavioral finance. I don't know if you knew that, but there are a lot of branches of finance aspects that study that part of the market, of the psychology of the investors. That's why they study it, because maybe if you release a news, you can affect the market, like it happened with Elon Musk buying Bitcoins. What happened to the Bitcoin price once Elon Musk decided that it is crap, or that it was a good investment? And
I
it
don't know
was
with
just
Bitcoin, but for example, with Dogecoin, it skyrocketed for a while.
that's market value. And Dogecoin is pure crap. Like it started as crap and grew as crap. And I'm not telling you just because it's crap or because it's my definition. It started like crap, being told by the users that they elaborated the Dogecoin. They started Dogecoin as a joke for the Bitcoin, and now it's worth more than a bunch number of companies. So the importance is that you get the market value, guys. So you have the market value, the fair value, the book value. Okay, 3 concepts. Those are gonna be in the exam for sure. So the importance is that if you pay above the fair value, which is the most commonly accepted, or no, not commonly accepted, is the most popular methodology of doing a merge an acquisition, because at the end you go with somebody that you want to merge, and you tell them, okay, my appraiser, the ones that gets the fair value, because those are certified appraisers, told me that you are worth 100 per share, $100 per share. That's the fair value. I'm willing to pay for your company $102. You do the math, okay? So the importance is that, imagine that you pay that, you know that your company is worth 100, okay? Just give me 1 second so I can do, remember the registers, guys, that I love to do? Bank account, debit, credit. Okay, I told you that if I pay from my bank account, your company is worth wait, sorry, $100, right? But I'm willing to pay for your company $104. So you get to the fixed asset, equity investments, debit, because the fair value it's 100, right? This is the fair value. Fair value. What are those 4 missing? This was the fair value of the appraiser. The appraiser, what is an appraiser? Remember me, guys, how you get to the fair value?
Net value, net present value.
Awesome. That calculation, you can go with a certified appraiser with que traducción es evaluador certificado. Hay evaluadores para este tipo de operaciones. And he will justify that that company, it's worth. Have you seen that type of, I can show it to you. The appraisals. So you can see them also. Look what you make me do. Let me share with you so you can see an appraiser evaluation. Remember, guys, you have click. This is a valuation. Are you watching my screen?
Yes.
He was our appraiser, government license, whatever. He's even from Anahuac. He's also a professor from Anahuac. And he did exactly the same thing. I'm just telling you, these are projection business valuations. And you will see he gets the cost of capital. Remember that from the cost of capital, you get the weighted average cost of capital, the WACC. And he does a fair value, which is the discounted cash flows worth. Okay. And he finally tells you that the fair value of the investment project is black. Okay. You show you one valuation. So getting back to our whiteboard. So guys, I just buying your company shares. I credit my bank because the fair value of my appraiser is 100, but I decided to pay you 104. Why? Because I see a good investment opportunity, because I want to pay you a premium, because I'm buying you, because I want you to have an extra, because I don't want to pay you the fair value. And that's why I'm telling you, this is the most common case. It's because you can also pay 98, okay? We can see that part afterwards. But first of all, let's see the most common case. What happens to that $4? Because this is not matching. Who can tell me?
I think, I don't know if that's the right thing to do, but maybe you have to register them in some other accounts in the debit side.
Totally, that's for sure. So we can match credits and debits. These matches, we're missing $4 in here, but the important aspect is, what is this account name?
Is it Goodwill?
That's it, Samantha. As easy as that, guys. That's Goodwill. That's the explanation of Goodwill. And this takes a lot of time to make people understand it. Like directors and controllers. So that is why you often will see in public companies that you have something called Goodwill. And it's not because they are making donations. What is the translation of Goodwill? donaciones, no? You donated, but it was in order to acquire a company. So the other case would be if you, I'm just teaching you the other case. It's very uncommon, guys. It's very uncommon, but I have to teach you. What if I buy it and it's not that uncommon, meaning that there are no operations like this. It's like the operations with Goodwill overpass way far the bargain operations. But what if I have 98 and I'm paying you 98? Why would this case happen? Why would I buy something in bargain? Those missing $2 that I'm missing, where should those go to?
Maybe a discount.
Discount on a sale? No. I need a credit, right, of $2. In the profit and loss, what are credits, guys? What is the nature of accounts of credits in the profit and loss? Tell me the account's name. I will get back to the classes. Assets, nature of accounts of
Revenue?
assets. Yes, revenues. This is income. I won't confuse you with what type of income it is, but at the end it's income. You are buying something in bargain, ganga. And you can buy businesses in a ganga phase. And there's the most common situation of buying in bargain situations. Can anybody tell me? Where do you think that we can buy in bargain situations? Where do you think that we can buy below fair value situations? Where would you negotiate to pay below fair value?
Where the supply is higher than the demand.
Please explain.
How could I explain it easier? Like if there's something that I need that I could get for less, for example, I don't know, any product that I need, example, raw materials, and there's a lot of supply of it, like a surplus. And
would that affect your cash flows?
we will have raw materials more raw materials like inventory for production at a less price. So no, I don't think so.
That would increase the price because it would cost less to you. It will increase your profitability. Increasing profitability you should expect more cash flows, right?
Yeah.
More cash flows means more value. So no, that's not a situation. But what if I tell you liquidity issues? What if you are over debt? Okay, you have the contracts with your customers, you have enough income, but you are not sufficiently you don't generate a sufficient cash flow in order to pay the debts, just the debts, where your operation is profitable. That's a very common situation, and I can teach you. Just take a look at Google it. Best day. Despegar, compra, best day. When Expedia tried to buy Best Day, they wanted to pay around $400,000 million, $400,000 million. Now, Despegar, when they buy it, they did a procedure before the pandemics. They started the procedure like in 2019, and they finish and announce it that they are willing to pay. You can't announce something that is not going to happen if you are a public company, because there are sanctions for that. If you announce it and it doesn't get properly done, you get penalized because you are affecting the price of your share with fake news. But they announced it before the pandemics. What happened is that Best Day started in the pandemics with negative cash flows, with problems to pay. So instead of pricing their shares, like they started negotiations with $150,000 million for the control of the company. They end up worthing like they bought Best Day for $50,000 million, like from 400 to 50,000. That's a bargain. So that's why I tell you that it's not very common. It's not the common procedure. It's not common, but I have to teach you that those cases are also in the picture. And guys, so now that you know that you have goodwill, the missing aspect is that goodwill is part of what, guys? What part of the balance sheet that I just told you? What part of the balance sheet is goodwill?
Assets.
Fixed assets. And fixed assets get depreciated, right? Depreciated or amortized if they are intangible assets. So the goodwill doesn't get depreciated or amortized, okay? You can't depreciate or amortize the goodwill. But in order to present to your shareholders the correct value of the goodwill, you have to do an impairment test. That it only means that if you suffer a decrease in the value of that goodwill, you have to decrease it also in your profit and loss, okay? Goodwill is subject to impairment tests, and that's the way to affect the value of the goodwill. That's the only way to affect the good value of the goodwill. If it doesn't affect material on a material aspect, the goodwill, the goodwill will value the same thing along the infinite, okay? That's why it's very hard to explain this type of aspects to students, guys. It's not an easy thing, but you reach, congrats on you, you reach the final aspect of consolidation. We will start the Excel, but I think it's enough for today. Let's start the Excel exercise, not for next week. Guys, I haven't agreed with Michael because I don't know if we have to take the Holy Week vacations for this topic. I have to.
Teacher, what did you say?
You mean Semana Santa?
Yes, that I mean Semana Santa. Well, I can finish. Wait,